Hello, welcome to Arista Advice. Question of the week is, Paul, it's 2024 and there's an election upon us. What should we do with the portfolio? The short answer is nothing. We buy assets for long-term appreciation. There's a lot of research out there, listeners, that show that the super wealthy people make less frequent changes in their portfolios. They buy an asset and they don't check into it for 5-10 years. If you've checked your portfolio in the last 30, 60, 90, 120 days, don't do it. Stop doing it. But let's get into the Arista advice. The Arista advice says that the year of a political election, people's anxiety, frustrations, and uncertainty goes up and it spikes. What's the best thing to do? Nothing. Allow the market to do its thing and allow yourself to not be influenced. Investors often try to predict the direction of the stock market based upon economic short-term events. The proposed economic policies of presidential candidates can influence the market expectations, but if a candidate advocates for pro-business policies such as tax cuts or deregulation, it may be viewed positively by investors. But if they do, that's short-term news. The worst thing to be doing is to digesting short-term news and thinking it's going to have a long-term effect. It doesn't. Presidents stay in for 4 years, and many times it takes 2-3 years for their policies to even get passed, and then by then a new one's in. Remember, presidential candidates' stances on trade and foreign policies can impact international markets, but oftentimes it's immaterial. The stock market valuation in businesses and goods and services dwarf what a presidential candidate can even do in the short time that he's in. Changes in financial regulations proposed by candidates can, but oftentimes it takes a while to get it into effect, and then the new one goes in and unwinds what he did as a childish form of my policies are more important than their policies. It's jovial gibberish. Just remember, buy quality assets for the long term and stay invested. As you'll see on this chart couldn't say it any better. Red for Republican, blue for Democrat, and guess what happens? You look at it, and no matter whether it's Democrat or Republican, the market goes up. Goods and services are being bought and sold all over the United States, all over the world, and that drops to the bottom line for a positive earnings and a positive net income for corporations. In conclusion, the message is that while political events, including presidential elections, can impact the stock market short term, in the long term, it's really a moot point. Remember, go to aristawealth.com to get other videos, tools, tips, and resources to help you live a life of significance.